All right, guys, welcome back to the channel. Obviously, it's Tuesday night, date night, DeFi date night. Myself and AJ Brockman, just like we come on here every single Tuesday night, and we talk about Bernard bonds, DexFi, whatever else you guys want to talk about. Ask questions, please, in the comments if you have questions. So we're not getting 100 DMs afterwards. We're going to go over a few things tonight that we think is very, very important because I got, and I know AJ got lots of questions as well. And I did too about, the APR. Why is the bond value, how come the price of the bonds are down so much and stuff like that? We're going to go over everything, guys. So please ask questions so we can answer them. And then, because we're busy. We have a lot of things going on in the background. We never stop, we never stop building. We never stop talking about things, how to make things better, things like that. So please, if you're live with us, say hi in the comments, please, to make sure I know it's working because I have no idea. I'm still getting used to StreamYard. I'm not a streamer, guys. Neither is AJ. Like, we're just a couple of bums. But here we are talking about everything. And first of all, thank you, AJ, for joining and taking time out of your busy schedule. I'm glad you're here.
Yeah, Ryan, definitely, bro. This is again our DeFi date night. We've been doing this every Tuesday for the last 6 months at least. We've been going to town, and yeah, man, always happy to be here and talk about my favorite thing in the world, cryptocurrency. So
That's right. Okay, I want to get this started right away, and it is the most asked question out there, and I think we just need to drill it into people's heads that this is not a Ponzi. And speaking of not a Ponzi, what is the deal with APR being at 84.32% right now, AJ? Because 7% a month, that is unacceptable. Like that, I can get that at the bank. Like, what's the problem?
yes, brother, I love it, Ryan. So yeah, we'll go over a lot of stuff tonight, but we can start here. And yeah, I get it. I mean, we said all along that the target APR is between 100 and 120%. Again, it's a target; it's not a guarantee. And I think what we really just need to take away from tonight is that this is not a Ponzi. This is real yield, and nothing in this protocol is guaranteed. And that is the beauty of the platform. I mean, again, we have full transparency with the DBank link. You see where the money's coming from, which we'll go over in a minute. But because it's not guaranteed, that allows the protocol to be very, very flexible. And let me give you an alternative example. So, many protocols that guarantee a monthly or daily yield, they are in somewhat Ponzi's, even with good intentions, because there is literally no way that you can guarantee a yield like that. You have to basically bet that you are outperforming the market, whether it's through trading or LP providing or whatever it might be, and the price appreciation of those assets to be able to pay a monthly or even a daily guarantee. So the flip side of that is when the markets are down and you can't make price appreciation from the assets themselves, now you dig yourself a bigger hole, and eventually your liabilities outweigh what you can produce. And even if you do a promo or try to get new capital in, you can't catch up. And when that happens, it's over. Either the protocol ends. If you're lucky, you get a refund of what's left. But 9 times out of 10, well, 99.9 times out of 10 or 100, it just rugs and disappears. So no matter what APR you're getting, that APR doesn't matter. You could get 1,000 APR percent APR a month. If at the end of it your money disappears, then none of that matters. And so those are just some of the things that we try to educate. Again, I've been in the space for going over 10 years now, and that is the mindset that you have in the beginning. You try to chase the APR. You want to go to protocols that have the highest APR. I get it. A lot of you maybe, more of a gambling mentality where you need a 100x. But this is not the protocol for you if that is your mentality. what you really need to focus on is what the billionaires of the world do, and that is investing in price appreciating assets and yield producing assets. So, Elon, Bezos, all the big guys, they have businesses. Those businesses produce revenue, and hopefully their stock goes up as well. Even other entrepreneurs that have real estate, they buy property, they rent it out, they have a price appreciating asset and a yield bearing asset where you can live off the yield and never have to touch the principal. That is the mentality you need to have, and bonds are exactly that. I mean, you are essentially getting, a potentially price appreciating asset in the bonds themselves, and you're earning yield along the way. And yeah, I mean, again, uh, some months it might be 7%, some months it might be 10, some months it might be 12. All of it is variable and solely dependent on the volume that these pairs do. So over the last, week or two, crypto's been pretty, uneventful. Again, we came off of the World War III FUD, all the geopolitical issues, and obviously price goes down. When that stuff happens, we've seen volume drop off a little bit, but as we continue into the bull run later this year, that volume should increase, and then therefore the fees that we earn increase, and therefore the APR increases. So it is a give and take. And you mentioned too, Ryan, about the bonds price themselves being down. As you can see, ETH is down now right around this $2,400 level, which has been very, very strong, support and resistance. So again, I think we're much lower or much closer to a bottom in terms of ETH than people realize. And so, obviously right now bonds are down. I think when we launched the bonds, they were around, I want to say 2,700 or 2,500, somewhere in there per ETH. And so if you just take a step back and actually do the numbers, the yield that you have earned over the last 2 weeks, if you minted in the very beginning, that has actually mitigated the risk of your downside. Where, if ETH is down, say 15%, you're really only down probably about 8% because of the yield. So that's another really key thing to kind of remember. And it really is kind of like a slingshot where, yes, with the overall fund being exposed to alts, half the LP that we have is all Ethereum, but the other half is alt tokens. And when we say alts, we don't mean, low cap shit tokens. There are some altcoins for sure, but a lot of that is the price you pay for the higher APR. And what I mean by a slingshot is when things are going down, then yes, then sometimes the overall fund is down more in terms of the ETH ratio. But when it goes back up, it's that rubber band effect where typically alts dramatically outperform ETH. So now not only are you up in ETH value per token, but you're also up, based on dollar value. So again, you have to be okay with the volatility. And you said it jokingly, Ryan, but I encourage anybody to try to find, even 5% monthly that is even remotely sustainable. And we are. I mean, you see everything is on chain, no smoke and mirrors. LP providing is a proven, method that all the big crypto hedge funds do. It is here to stay, and we can't just look at the success of the bonds in a 2 week window. Even a month is really too short. You really need to be having a 3, 6, a year mindset to really see the power of bonds.
Yeah, exactly. I love that analogy about, the volume. I mean, look at this, guys. The ETH volume is down. This was just 10% in the last 24 hours. So 10% in 24 hours of the volume. That is a huge, huge thing for how DexFi, Bernard Bonds, makes its money. And when they
Totally.
make money, ladies and gentlemen, this number will go up. Okay. Pure and simple. USDC, like I had one DM saying, I don't see my USDC isn't growing as fast as it was the other day. That's because it's not a Ponzi, guys. It's not some timer that drops you a penny every 30 seconds. As soon as there is a yield to be given out, the USDC, the smart contract, gives it out to the wallets. It's not some timer. It's not some exact number every minute, every hour. It's real yield. It's real revenue, guys. So that APR, you're going to see it fluctuate. Well, someday it might be 150%, so 140, 130. On those days, you won't hear anything. But on 84% days, and now that 84% number, I did the math the last 4 days on my stake here, okay? I have 4 bonds. Let me look at my notes. So 4 days ago, I made 11.2%, or it would have accumulated to 11.2%. The third day, it was going to be 10.8. The second 2 days ago, it was going to be 9.1. And the last 24 hours, it was 7.2%. So the volume is coming down, guys. Therefore, the APR goes down. So it's the last 24 hours. This 84.29 is very, very accurate. It was over 7%. And that's why I jokingly said, what is wrong with 7%? I mean, if we get into a bear market, guys, and you guys are mad about 7% a month, this isn't the thing for you. Go find something else. Go put it in the bank and get 1.25% a year. I don't know what you want to do, but we're playing the long game here. I'm in it for the long game. Like AJ said, that's how people, that's how the big, heavy, and rich people get richer, because they invest in long-term stuff that aren't paying, a daily percentage, a weekly, stuff like that. That's just how the world works, right? I mean,
totally, Ryan. No, those are great points, bro. And I want to elaborate on a few other things. Again, we have a lot to go over tonight, but so the other thing in terms of APR, what you also have to realize, again, there's so many factors that sometimes it's even hard for me to explain everything, and even in an hour video. But the other factor, which we've been seeing, and in my mind is actually really bullish, is we keep seeing people minting bonds, and why that is really powerful, but it's also kind of a double-edged sword, is when somebody mints a bond, now there is more capital in the fund that maybe isn't earning. Like, in other words, when we see a lot of volatility, when we mint ETH, number one, or when ETH comes into the contract, a lot of times we convert it to USDC or USDT, so then we kind of hedge ourselves against the volatility. If we think it's more of an uptrend, then we put the ETH to work right away. So, but there is that float where some of the ETH is not working, or some of the USDT is on the sideline waiting for a better entry. And so there could definitely be 4 or 5 days where there is a lot more capital in the fund than is actually earning. And so that alone will push APR down, even if the volume is up. So that's another thing just to keep in mind. However, again, because we're sitting on the sidelines for those few days, we get a much better entry more often than not. And so when the market does recover, now your principal, or the price of the bonds, is up dramatically from that. So again, it's about, we're not actively trading the account by any means. We're not investing in any other tokens. Everything is LP, but there is still some nuance in picking great entries, and that's the expertise that you get with Bernard bonds. So those are just some existential factors that people all they see is APR going down, but it really isn't that straightforward. And that's not me trying to make excuses. It's just the reality of how the math works. So and that will be a lot less of an issue moving forward as well. Like right now, again, I say only, but there's only $250,000 in the bond. I think that's incredibly bullish, considering it's only been like 2.5 weeks. But when the fund is, and I say when, not if, when the fund is $1 million or $2 million or $5 million, when another 100 grand comes in, it's really not as big of a percentage. So then the APR is not as affected on the swing. So give it a month or two, and we'll see a lot more consistency in the APR as well. So those are just some other factors, Ryan.
Right. Yeah. And here's what AJ's talking about, guys. Here's like he said earlier, it's all on DBank, guys. If you press this button right here, it's going to bring you to DBank. Everything is on chain. There is no hiding it. We have over 25,000 in stables ready to deploy. So when someone deposits money, it doesn't necessarily ETH. It doesn't necessarily just, oh, we got to get this working for us. We have to have some stables to get in decent entries, guys. You can't just deploy 100% of the capital. And that's why I say last week, I said, we have a multiple six-figure whale coming in. It might be this weekend. It could be early next week, but it's a massive amount of money. And you're going to see this APR going down because AJ and Jake aren't just going to, they're just not going to throw this massive amount of money into these vaults without getting proper entries, So,
Totally.
But with that said, this 300, whatever it's going to be, this big amount, it's going to be, when we have those stables, that means we're collateralizing our bag, right? Like we can have more stables and more stables. And once we get collateralized, I mean, we're golden, guys. If we can do it like a 2-to-1 or even a 1-to-1 being collateralized to what we got, people invested. I mean, that's a beautiful thing. I mean, I don't know what else to say about that, but I mean, what are your thoughts on that, AJ?
Yeah, totally. So again, just to prepare everybody, based on what I just said, that's 100% the case. I mean, if 300 grand goes in there tomorrow, then APR could potentially show half. And again, that isn't the reality. So I don't want people to panic. And it plays along with the sustainability factor as well. What I've said many times is, um, because we're not relying on an inflationary token to pay the yield. We're not diluting ourselves. So I think people also get a little bit confused with that. It is short-term dilution, but that is just until we get the capital deployed, not because we can't find, a pair that pays enough. So again, I just want people to really understand that it's much more about the capital being deployed and what is working for us than what the yield is actually producing, minute by minute. And, ultimately, again, that will be less of an issue the larger the fund grows. And, a $300,000 deposit into $1 million is a lot less of a gap. So just understand that. And yeah, in terms of like collateralizing, so yeah, what happens is when we pick better entries and not just convert everything all at once, um, that gives us a better LP ratio. And so when the fund does recover, again in terms of ETH value, say ETH goes to 2,500, 2,700, up to 3,000, as that's happening, the ratio of the fund is outperforming the price of ETH because we've been able to buy ETH at lower prices and alts at lower prices. So again, back to my rubber band or slingshot analogy, typically with alts, they go down harder and they go up harder. So if you're able to buy them at the dip, they rubber band back, they spring back. Now the overall fund is worth more than just the ETH in there, and that is when you see the bond ETH price go up. So when we started, it was at 0.01 ETH roughly. Obviously now it's about 0.08 5 or whatever that is. And so that means the alts have been underperforming. Again, it goes both ways. So the alts have been going down because we've been in a downtrend. But to Ryan's point about the collateralization and getting in good entries, now the mint price for NFTs or bonds, even if ETH is the same price, now they're 0.05 or 0.0 I'm sorry, 0.15 per bond. So again, that means you're actually outperforming Ethereum because of the overall fund. So I know it's a lot to take in, and it takes a while to really wrap your head around it, but this is all based on math, not what I get on the AMA and say out loud. So that's another really cool part of it.
Right. Keith's got a couple of questions. Please discuss APR on lower bond price. For
Yes.
example, 100% on 0.0085 on current bond is actually 85%. If you paid 0.01, same in reverse as well.
Yeah, absolutely. So another reason people might think the APR is less than what it shows on the screen is what Keith is saying. So the actual APR in reality, and again, we can't individually, it would be impossible to show individual APR per wallet, on the actual display of the website because it's different for everybody. So what we have to do is determine APR based on the current mint price because that is what we're quote unquote advertising to people. Obviously, if you're minting a bond right now and the APR is not accurate, that would be a problem. So that is what we have to do. Now, there is some back end data, again, hopefully within the next 2 to 4 weeks. It's a lot of work in terms of code, but we are hoping to have a P&L at the bottom that actually tracks your own wallet. So to Keith's point here, it would show when you minted the NFT, what price you paid in ETH and USDC, and then give you a better, more accurate APR, or not even so an APR, but more accurate P&L of whether you're in profit or not based on your principal and the yield. So yes, that is coming. And yeah, so just to explore this a little bit further, it goes both ways. So, if you minted a bond on day one and you've been earning this whole time, yes, your principal is down and the APR is probably a little bit lower as well because you minted at a higher price than what it is. But you're still mitigating the downside of ETH because the only it's pretty black and white. Like the other side of the coin is you would have had just ETH sitting in your wallet and you'd be down 15% without yield and not earning anything for 2 weeks. So we really need to keep it in perspective on what's where your capital is deployed. But it does go the other way. So and this is what I get most excited about knowing that we're in a little downtrend that typically we see a blow off top and the real alt season in October or the end of this year and macro and sentiment for crypto overall is still really hasn't even happened yet. I mean, again, and this is all my personal opinion, but just based on being in this space for so long. So to that point, if you're minting a bond now and you're paying again, say $200, now ETH goes through 5 grand, and now your bond is worth $500. Your APR is gonna double at that point. So it does go both ways because again, we're still earning on current market value. So when you're providing LP, you're getting the actual tokens as part of the fees. Like again, if I'm providing LP on Bitcoin and ETH, I'm getting Bitcoin and ETH as part of the fees because that's what's trading. Now we convert it to USDC with our proprietary software to lock in those gains. But if ETH and Bitcoin double from here, now the dollar value on the fees is also doubled. So that's why when we say APR will double, it's really calculated in the price of the tokens themselves, and that's why it is sustainable. Where minting at a lower price right now could be the upside potential is massive for sure. So again, and that's not to make you FOMO. That's not to convince you to do anything you don't want to do. I'm just simply stating how it works. And in my personal opinion, I get really excited about that because minting now and compounding, into more bonds while the price is low can have a dramatic effect, 6 months from now.
Right, exactly. And then Keith also says best to underpromise and overdeliver, in my opinion. What are the expected lows for APR and bond prices realistically?
Yeah, so again, that's really hard to say because, we it is all fluid and there's a lot of variables, but we've been doing this now for 3.5 years with our own treasuries, and even in the depths of a bear market, again, there's always opportunity. People think that, with things going down, that 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 everybody leaves crypto. That's not the case. When you're tapped in like we are, I mean, even in the middle of a crypto winter, there's always opportunity, and some volume, even if it's just, stables. But that being said, I don't think we've ever been below like a 40% APR, somewhere in there, at the bear market lows. So it's not like tomorrow the APR goes to zero. Like that would never happen. So again, it's all variable, and yes, if you minted bonds now and APR drops in half and your principal drops in half, maybe you're at a 20% APR. But again, as long as you're getting more than 10% APR, obviously there's risk in crypto, but the pools that we're in, the LPs we're providing, the safety that we've done through our security. I mean, yes, it's risky, but it's not as risky as it seems, I don't think. So, if you would rather be in the stock market, at a 10% APR, then that's okay. And that's the other cool part. Like anybody can leave at any time, and that doesn't hurt the overall fund. Like it actually helps all of us that are still here. So there's a lot of things that we have built in to mitigate the risk, and make this as sustainable as possible. So Ryan, I know we talked about this a while ago on the last two AMAs. Um, when you exit Bernard bonds, there is a 10% fee, and that fee goes to all of you that are still in the fund. So if half the people exit, now you're earning on, again, just in today's numbers, about 25 grand more than what you put in. So that will boost APR back up again because you're earning on capital that you never put in, even in a bear market. So, all of this is kind of an ebb and flow. And even if people exit, it's not like a token where, people are dumping on one another's heads, and everybody gets screwed in the end because the price goes down so hard. It's actually bullish to see people exit because you get part of that 10%.
Yeah, exactly. And that might happen, guys, when the bull run. I mean, I see Keith says when ETH hits 4,000, this is non-issue. Keith, I think in my opinion, obviously not financial advice, I think there's $7,000 to $8,000 Ethereum
Yeah,
before the year is up, right? November, December, somewhere in there. I don't think that's out of the question. Then we're not going to have these questions because the APR is going to be up. Your bond price is tripled, and everyone's going to be happy. But there will be people taking profit by redeeming their bonds. And please do take your profit, set aside what you put in, leave the rest of the bonds working for you. You are risk-free, ladies and gentlemen. You can go anytime. Just remember the 10% tax, please, because that's and I invite you at those prices to redeem because I want a piece of that 10% every month because I'm staying in because I like making APRs. I like making
yeah,
more. I want to make more money off people's money that they left in the protocol because they redeem their bonds. That's
totally.
just me. And that's what's beautiful about this because the 10% is not going to the team or anybody else. It's staying in there working. It's rewarding the long-term holders. And that is what is super important here.
Yeah, absolutely, Ryan. And I just want to make two more quick points. Sorry, I know I've been kind of taking over tonight, but I'm fired up, man. So, yeah, so two things. So the price of ETH. Yeah, I mean, Keith, I love your enthusiasm at 4,000 a token. But to Ryan's point, my target is about 8,000 a token. So, and I just saw a podcast with Kathy Wood that called for a $25,000 Ethereum. So, and again, if you guys don't know who Kathy Wood is, she's been one of the best short-term investors ever. So that is really bullish to me. And so, yeah, to your point, you know, the upside potential just gets really insane when you think about numbers like that. And I agree with Keith. It's better to under promise and over deliver. Um, but I think that 4,000 is definitely in their cards, if not a lot higher. And one other point I just want to make. So when we are in a bull market and what we feel is the top, so to speak, it's always really difficult to choose the top. I mean, people think they can do it, but it's almost impossible. So when we do get to an upper limit on bonds, the hope is that we are still producing an attractive APR for people all the time. Like bonds are not just going to go away and only be here, in the bear market and then, come back around for a bull. Like the whole idea is that with the system, no matter where you mint bonds at, it is still lucrative. Now, again, if you do mint at the absolute top of the next cycle, and we come back down from there, that all that means is that you have to stay in the bonds longer. So it doesn't mean that you again are essentially losing value, and it works the same way I said earlier. When you really break it down in black and white, you know, um, the only other alternative is buying ETH at the top. And if you only buy ETH at the top and it goes down, then now you're experiencing that same price decrease without any yield whatsoever. So, just keep that in perspective. Obviously you shouldn't be, selling your house to buy bonds or putting in rent money. I mean, it is something that you should scale in and scale out of. But to each their own for sure.
Yeah, exactly. And Gravy says, if the redeem function is executed, does it lock in the bond price at that moment, even though it may not be given out for 24 to 48 hours? I'll let you take that one, AJ, because that's a good question.
Yeah, that's a great question. So yes, as soon as you redeem, it is locked in. So the smart contract knows the price of ETH right when it happens, and yeah, again, in terms of over or under promise and over deliver, we do say 48 hours, but we've had like one or two redemptions. Again, not many at all, and they're usually within like hours. So we say 48, but it usually isn't that long. And yeah, I mean, the swing should not be dramatic at all in terms of price, but as soon as you submit the redemption, it will snapshot the current value of ETH and in USDT terms.
Mm-hmm. Yeah, I guess I didn't realize because I've been keeping track of this page of the burn function, and I didn't know that there was any redemptions because
Yeah.
this is supposed to be where they're posted. And the only ones I see was the test right before launch.
Yeah, well, I don't think anybody's redeemed Bernard bonds. I think we've had one or two in DexFi bonds.
Sure.
So yeah,
Okay.
yeah.
Yeah. So we're solid in Bernard bonds, ladies and gentlemen.
Yeah, you guys are diamond handers, man. Yeah, nobody's redeeming over here. I love it. Yeah.
So yeah. What else do we need to go through? We talked about the upcoming updates. It's going to show, and that's going to be awesome because when it'll show down your AJ, it'll show what day you bought it, what price you paid in ETH and USDC, and then it'll keep track of how much USDC that bond has earned, and it'll give you the P&L.
Yeah, so it won't be per bond, but it will be I mean, yeah, the data per bond will still be there, but the P&L is overall. So yeah, it's kind of a mix between both of what you just said, Ryan. So the bonds themselves will still show you, when you minted, the price in ETH, the price in USDC, and then there'll be 4 little boxes above that that give you the overall performance of where you're at. I mean, even to the point where it can average what your cost basis is, what you, again, there'll be multiple different settings that you can choose. But and if you want a taste of that, if you go to the vaults, you can see, we have a lot of those metrics in the vaults as well. So I know you're in a few, Ryan. I don't know if you're connected, but yeah, it's the same sort of setup that's in the vault. If you click into them and then go down, yeah, like so you can see, yep, yeah,
All right there.
yep, yeah. So yeah, that's like what you paid. What, yeah, there exactly.
Okay.
Yeah. So very similar to that. But we just have to, yeah, and down below too, actually, Ryan. If you go to historical data, yeah, right there. So those 4 or 5 boxes, that's also, yeah, at deposit, what it was worth, a week, a month, a year, and then yeah, the yield that you've earned, and then the P&L is the price appreciation or depreciation of when you minted plus the yield that you've gotten. That is what determines the P&L. So
Oh, I didn't even know that was there.
yeah,
Okay.
man, it's all there. Yeah.
Okay. So, all right. Let me go back one here because I mean, and we'll talk about that in a second. So I think I'm down on pretty good on one of these. Let's see, this Anon, I think is I'm down on.
Yeah,
So
Anon's an AI.
41%.
Yeah, it's been getting hurt pretty bad lately, but again, that's the beauty of bonds too, is that we're not over allocated to any particular asset. So, and Anon is a very, again, it is an alt, but it has a lot of utility behind it. It's an AI token, obviously. All of us are bullish. I know I am on the future of AI. So yeah, I mean the recovery. I mean, a token like Anon can go up, 30% in one day. So again, that's kind of and again, I get it. Some people don't want that volatility or that exposure to alts, but unfortunately, you can't have both. So if we were only providing, liquidity for Bitcoin and ETH and stables, the APR would be, 25% or 20%, not 100%. So you can't have one without the other. And so we feel that it's much better to allocate in the high volume, more, mid to low market cap tokens that have amazing fundamentals, that have a lot of, liquidity, that have really great teams behind them, and the chances of them going to zero are a lot less than, rocket to the moon token or any other shit token that's out there. So we still definitely are very cognizant of that. But even in this case, Anon, we have some Anon in the fund. Even if it went to zero, now that's maybe 1 or 2% of the overall fund, rather than being in that vault yourself. It may be 25% of your overall portfolio if you're only in a couple of vaults. So yeah, there you go. So yeah, see, yeah,
Yeah,
some of them, and yeah, it's in,
$3,600.
yeah, yeah.
Yeah.
So yeah, and we, again, that's another thing. Like if we see it underperforming, we exited out of Anon. We had a bigger position, but we exited out of it. When we started into the downtrend, and obviously Ryan is in those vaults as a example, but there is still, if you do the vaults on your own, you still have to actively manage them, even with our automation. So Ryan, you wouldn't have known to exit out of Anon and then get back in later. Yeah, so that's again what we do, and why you would be in bonds and not do it on your own.
Exactly. And the only reason I went in these guys is just like, you don't have to get into borrowed bonds. You don't have to get nothing. You can go in here, hook up your wallet, get some ETH on base, and go into any of these vaults yourselves. And you can take control of your own destiny and keep track of, if you've got the time to to research tokens and go through all these vaults and stuff like that. I don't. The only reason why I put in like $500 or $600 in, it's been 40 days now, 40 days today. The only reason why I did this was just for content. I have no time for this. I'm not going to claim. I don't even know where to go to claim. How do I even go to claim? Where's my
Yeah,
claim?
if you switch, so up there at the bottom right there, Ryan, claim profit. Yep, there you go, bro. Yeah. So
Okay.
what? You have $4? Yeah.
Oh yeah, five. Yeah, but where would I see the back to that? There we go. So my profit, I've made $52.64 in 40 days. Okay. And here's my 5 positions. Now I'm going to let these ride until I'm not going to touch it for like ever. I'm just going to let them build, and I'm not going to claim anything, because when this thing says 25% compounded, what does that mean, AJ? Where's the 25% going?
Yeah, so that's another really good point. So, obviously with our vaults, everything is private, so people can't, know the secret sauce of what we're doing, all of our private vaults. And that's another cool thing. I mean, again, some protocols maybe do have great intentions, but they're not able to dox their wallets because then people can literally copy them. So I get that argument for sure. But we have a proprietary software that we can publish private vaults that show you the assets, but not the secret sauce. So that's another reason why we have a market advantage with DexFi. But yeah, so some of the vaults and even some of our private vaults, we do have a small percentage that compounds. So what that does is when we harvest the fees, in that example, the first one, REIE, 25% of all the profit goes right back into buying or the LP position. So half REI, half ETH. And what that does is, number one, it helps you what we call, or it helps you avoid what we call erosion. So sometimes with LP positions, some of you, again, a lot of people call it impermanent loss. But even above and beyond impermanent loss, sometimes if you only take profit, and the token doesn't go up or down, you get what's called erosion, because you're basically taking away from your initial principal allocation. And so we always have a little bit, or if we don't, we just know that we're going to exit that pool eventually. But that helps really keep you earning, because and back to the whole principal versus yield comparison. If you do at least some compounding back in, then you're always DCAing as well. So like, if ETH or REI is down and that 25% compound, you're buying ETH and REI when they're down. And so when the tokens do recover, now your principal balance is a lot better. You're in profit and you're yielding. So again, it's a way to kind of protect you against the downside.
Right. Yeah, exactly. And like I said, guys, if you feel like doing that instead, go connect your wallet, get some ETH on base. And Bernard Bonds is just the easy button for this. That's the way it says right out. Easy button yield for me. That's what I like. I don't have time to watch research coins, research vaults. I just want to buy a bond and just watch my USDC grow every single day. Right. Like that,
Totally.
that's what I'm doing. So Patricia, when you have time, give me a call. You've got my phone number. I will help you out, whatever you need. You know that. Gravy says, I've been keeping track of my bond purchases in Excel. I have noticed that the purchase price displayed is different in the DApp. Purchase price displayed is different in the DApp. So I don't know what that means. Do you, AJ?
Yeah, no, I mean, I think maybe what they mean is that 0.0816 or whatever ETH converted to $204. So yeah, I mean, again, like our Oracle updates every 2 seconds, or again every block, which in ETH is about 4 seconds. So yeah, I mean, I don't know like how granular you're getting, but it's usually within like 1 or 2 cents. I mean, I don't know. There's usually not a big difference at all. I like that you're keeping your own Excel spreadsheet. That's awesome. I encourage all of you to do that as well. So yeah, but I don't know. I mean, maybe you just had really bad luck and somebody minted like right before you minted, or I mean, there's a multitude of factors, but yeah, and always try to refresh, as well. But it shouldn't be more than, maybe $1 discrepancy, even if somebody does that. So if it is, let us know for sure. Yeah.
Yeah, and then also Gravy, yeah, like he said, refresh and go to base scan and actually see what the transaction did. What actual price did you get it at, and then you can figure it out from there.
Yeah, that's
That's
another great point, Ryan. Again, that's not even us displaying, you can see right on chain the mint price in dollars. So yeah, and remember that was I saw it in another chat. I don't know if it was Bernard or our main one, but the price in ETH when you go on Etherscan or Basescan, it updates the price based on current like markets too. So sometimes it can be more confusing when you go to base. You have to really make sure that you're time stamped as well, because sometimes even though you mint, an hour ago or whatever, it will show the current price of ETH, and that does have a big spread sometimes. So
Mhm.
just be aware of that. And again, when in doubt, you can always just go to, like the chart and look up the exact hour that you minted, and it'll give you a price, on Dex Screener, as well. So that's another way to do it.
Right. Yeah. Exactly. Yeah. Dollar value is a dynamic field. Yes. Um, correct. That's and
Yes,
yeah.
yeah, the dollar value, and again, it even goes down. Again, I don't want to confuse people even more, but USDC is not always a dollar, so that's another issue. Like sometimes USDC is 1 cent above or below an actual dollar, so that is another variable that we have no control over. So again, there may be some discrepancies, but nothing major for sure. Yeah.
Exactly. And like, if there's any questions, I mean, even on minting, guys, I really want you guys to just go check uh, that the DBank page out by clicking this little button over here and showing what kind of transparency this is. I mean, you can click portfolio. It shows what our bags are holding: 25, almost $26,000 in stables, couple thousand in ETH. It shows exactly what vaults are in. It's not going to show our entries, our exits, or anything like that, because that'd be giving away the secret sauce. So as we have some Sonic vaults going, I mean, everything is there. If you click transactions, it'll show when people minted, like 2 hours and 6 minutes ago, someone minted 5 bonds right here. 5, I just did the quick math, 0.421 ETH. A little bit before that, someone minted a couple. I mean, it's all here. Even when people, when they do a swap from ETH to USDT, everything is on chain, ladies and gentlemen. There is no hiding 1 single cent. And that is what I love about this, because you can't run and hide. There's no smoke and mirrors. It is all right in front of you. And I don't know. Nobody is doxing their wallet like this and showing it on DBank. Correct, AJ?
Yeah, Ryan. Again, bro, this really gets me. I'm nerding out a little bit because when you show this, and I love that you encourage people to go and look at it for themselves. This is DeFi. When people say, I do crypto, or they want to get into crypto, they think holding Bitcoin on their Robinhood or Coinbase account, they think they're in crypto. This is crypto, and that is so cool to me because we're helping show people how to look on chain and see the transparency and understand why blockchain is so powerful. This is why blockchain was created right here. It is an immutable, transparent, verifiable, viewable database, essentially. And that is the power of blockchain. And we are now being able to apply that to our protocols. So, to your point, Ryan, yes, I mean, literally, I mean, there is a paper trail for every single cent that goes through bonds. And, obviously, if we were doing something malicious, or sending money where it shouldn't go, that's on chain. Like, people would know that immediately, and we would never do that. So again, it is about accountability and showing everything on chain. I encourage all of you, even if you have no idea what you're looking at, just poke around and learn, because this is true crypto, true DeFi, decentralized finance at its finest. And yeah, Ryan, I don't know literally any other protocol that does this. So yeah, I'm very proud of that for sure.
Right. And what they want to touch base with too quick is, what are these protocols doing right now, AJ, with ETH trading sideways at 2,400?
Yeah, bro.
I mean, it could last for a couple of weeks. What are these protocols doing? I'm not going to name any names, but there are a few out there, and they're big, millions and millions of dollars in TVL. They're guaranteeing a percentage. Like, how is that? How does that work? Like,
Yeah, brother. Honestly, it's scary. So again, I'm not here to talk bad about any other project, but I do want to just give people the perspective. So, any protocol that you see that offers a guaranteed uh daily or monthly or weekly return, there has to be some sort of Ponzonomics involved, because it's literally impossible to be able to pay as the price of the assets and LP go down, in the long run. Like, again, short-term volatility, I get it. 9 times out of 10, you can cover the liabilities. But what they do, and why this is a dangerous game, is you are not getting price appreciation. So in the of the principal. So it's usually USDC in, USDC out, and we've learned some lessons of our own with this, where having actual ETH is a much better system, because you are getting upside potential, and everything is legitimate and transparent and no smoke and mirrors. When you start getting into the guaranteed territory, you have to make money on the principal to then be able to pay the yield. So it gets real tricky, and some people can do it. Again, maybe they're leverage trading as well, or maybe they're doing other things behind the scenes that you don't know about, to get that price appreciation. But when the music stops, it's bad. Like, again, that's when you get a 404 error, and the website's gone and all your money is gone, and that's the end. With bonds, there would never be a situation where everything would go to zero overnight. Like, it's just not a thing. And even, like, God forbid I die or Jake dies, we have plans in place to recover funds. I mean, it's not like it just goes to zero. So and again, the other argument is safety or hacks. But we've been through that. We've have a bulletproof system now, and even in the original issues, none of the private vaults were ever affected. So, and all of our vaults are private. So it's a much different situation. And yeah, I mean, it's scary to think with protocols that guarantee returns, they have to have a lot of stuff go right for them to be able to pay out. With our bonds, it just means maybe the APR goes down for a few days. Instead of everything going to zero, which I would much rather have a lower APR for a few days than lose everything. So
yeah, exactly. And I like that. That's a perfect explanation too. Kendall says they're probably trading it to pay a guaranteed percent. Yeah, they could be. They could get in trouble and be like, "Hey guys, we need to make some quick money here. Let's go long or short on Bitcoin or something, and let's try and make it up."
totally.
That can happen. Maybe they're doing that. We're not going to talk bad about anybody. I mean, when the guaranteed stuff happens, I mean, even when we were in the old, private group guys, we always said the month before, yep, it's going to be this percentage, but next month it could go down. It all depends
Exactly.
what the
Yeah.
forecast is for crypto. So,
And that's why I love that you brought that up, Ryan, because again, that's why it was always a month in the rears, because it was real yield. I mean, again, we can't guarantee a number that we don't even know is going to happen. So it gets really, really dangerous when you start doing that. And again, some people make it work, and if you've made that work and you're earning, then good for you. But that's a risk that I'm not willing to take in the long term for sure.
Right. Exactly. Yeah. I mean, I think, have we covered pretty much everything? It's really good questions, guys. I appreciate the questions on here. I think we talked about everything. Do you have anything to add, AJ?
Yeah, no, I mean, I think Ryan, we're I'm bullish, man. I know we get people asking about why price go down, why APR go down. That's just the nature of the beast. But and again, I don't want to obviously don't want to encourage anything that you're not comfortable with. But really, if it was my positions, and I'm in the farm, the bonds. I mean, that's another thing. We use our own contracts and protocols to yield. I mean, we have a big position for our dev fund. We pay for all our development through our treasury yield, utilizing bonds. So we're doing our own. We're we're using our own supply, so to speak. So that's really important. And so on that note, though, like I was saying, we you know we we are compounding. And again, I don't want to encourage people to do something they're not comfortable doing. I think it's very healthy to take profit. If you have bills that need to be paid, by all means, take that USDC and spend it. But while the market is down and you can build positions on the cheap, every time you're able to mint a new bond from the yield, you are even further mitigating your downside risk because you're building your principal, you're then making even more APR because your principal is going up, and it has this really incredible compound interest effect. So again, Einstein said it was the eighth wonder of the world, and taking advantage of that compound interest while things are new and fresh is really, really powerful. So that's just a little bit, again, some background. But if you want to exit or you want to take full profit every day and every week, then by all means go for it. And that is, again, the cool part about the system is that it doesn't hurt anybody else that's involved. So it's a win-win for everybody.
Yeah, it's a win-win, guys. Either way, if you exit or you take profit, it's not going to affect us. It actually helps us if you redeem. It's rewarding the long-term holders. Like AJ said, guys, this is what the big guys are doing. I mean, it's insane. What do you think BlackRock, State Street, Vanguard, what do you think they're doing in crypto? This is exactly what they're doing, is getting into stuff like this, just on a way bigger scale and with way bigger bags. This is what the big boys do. We're starting out on a small scale. Maybe one day this thing grows to $100 million. And I mean, that would be awesome, or whatever, like Beefy Finance, or maybe Beefy Finance buys us or something, or buys
Totally
and everything. Great, whatever. It doesn't matter. But nowhere else, none of those places. I mean, the competition, they will not dox your wallets. They will not show your wallets on DBank. They won't do AMAs with you every Tuesday night. They won't. You don't have access to the guy who talks about it 3 times a week, the person who built it right in front of your face, talking every Tuesday night at 7:00. These things do not happen anywhere. So take advantage if you want. If not, if it's not for you, like I said, it's the long game, guys. I'm in it for the long haul. I don't care if I get 5% or 60% APR, 50%. It is 50 times more than what I can get anywhere else. My real estate doesn't do that, and I got to go clean toilets and unplug sinks. Not fun. So this is the easy button for my passive income, and I love it.
Absolutely, brother.
Yeah. With that said, I mean, I don't know what else to say. I'm excited as you are, AJ. Like I'm pumped about Bernard Bonds. I mean, I think it's going amazing, and I'm just super excited about it.
Yeah, no doubt, brother. I know we're getting on an hour here. We can wrap it up. But yeah, that was what I just want to end with, that I am very, very confident, very bullish, very excited for the future. Yes, if you minted on day one, principal might be down a little bit, but you're still outperforming ETH as if you were to hold it in your wallet instead because of the yield. And yeah, I mean, we have incredible plans, on growing. I know, Ryan, you have some whales entering. Overall, the TVL in the vaults is now up over 3 million, which is amazing. Again, if people want to put their own money in the vault separately and manage it, I mean, we have very skilled crypto users that are using the vaults to make their lives easier, and that is the ultimate goal. Is like you said, Ryan, the Vanguards, the JP Morgans, the hedge funds of the space utilizing vaults to make their lives easier. Again, I think we easily see 10, 50, even 100 million in TVL overall at some point. So
Right.
I won't be happy until that happens, man. We're always grinding. So
Yeah,
sure.
exactly. That's what we do is we grind. We always pivot. We always adapt, ladies and gentlemen. Thank you, AJ, for joining. Take the time out of your busy day. I look forward to Tuesday nights every time to talk with you guys, spend time with you guys, answer your questions. This is what it's all about, ladies and gentlemen. Bernard Bonds, Treasury Bonds, DexFi. This is what we do. We talk about it. We answer questions. We're here for you in front of the camera, doxed, team. I don't know what else to say. Everything's on D-Bank. So you check out Bernard Bonds. Link is in the description to get in. It takes ETH on Base Network. Very simple. Hook up your wallet, purchase your bond. They're on sale right now for $202.83. And that's it. I hope everybody has a great rest of their Tuesday evening, and we'll see you in the next one.